Hello everyone, thank you for joining me here on Finance for JCL. A very warm welcome to you. So coming up today, the portfolio changes that I've made to my main portfolio in the last 2 weeks, including averaging down into 2 Chinese stocks, so stay tuned for that. But if you're new here, this is Finance for JCL, and the main objective is to track my progress towards my very long-term investing £1 million portfolio goal. We also look at stock reviews, personal finance, and how-tos. So we're going to begin today with the sales. So I've closed out one position entirely and trimmed 2 existing holdings. So the first position that I've sold, closed out entirely, is Greatland Gold. Now, this is probably, say, arguably my worst purchase that I've made in the last 12 months in terms of the reasoning for purchasing it. Jordan, I know you're listening to this, but you'll probably be disappointed that I sold this one. But for me, it's very much more of a speculative holding. It's a very, very small part of my UK portfolio. And when we get into the stocks that I bought, you'll see the very first stock that I bought is a far superior proposition to this in terms of risk and probably potential return. So that's why I sold that one. And the added benefit is it does consolidate my portfolio further. It's one less individual stock holding to be looking at. So the last thing to say about Greatland Gold is what Steps said many years ago: better, best, forgotten. Now within the portfolio, I do have, we look at my last UK stock market review, a decent proportion of money in the FTSE 100 index and also the UK index, which is a wider subset of companies. Now, with the FTSE 100, my aim over the last few months, as I've mentioned in my portfolio reviews, has been to chip away at that, reduce that holding, because I think I can get better returns in particular individual companies. So the UK index position has been trimmed by about £400, and the FTSE 100 position has been trimmed by a couple of £100. And that's freed up some cash to invest into this superior alternative opportunity. Now we're going to look at the positions that I have averaged out into. So there's no new stocks here. These are all holdings that I have already. There's been an excellent opportunity to market to reduce my average cost base. And that has 2 benefits for me. One is it substantially reduces the risk, because assuming, of course, that I believe the companies aren't going to go bust, which I don't think they are in any of these cases, then by reducing my average, it's less likely that I'll lose money on the company. And secondly, because my average is lower, when it eventually does go up to whatever number it's going to go to, then the potential return is higher. So I think averaging down is a great tool for both reducing your risk and increasing your potential return. So it's important to be able to have cash on hand to be able to do that at short notice. Some of these volatile stocks, they're only down for a few days, so you need to take advantage of the opportunity when they present themselves. So perhaps no surprise, first up is Alibaba, and this is now my largest holding. So I bought a tranche at 181, and it continued to drop, and I've got in at 164 as well. And if you watch this space, there might well be some more coming as well. So why Alibaba? Now, at the end of this, I will link to a video that I've just done on this last week, and that went through my thesis in terms of the valuation. And I think this is a company with a margin of safety on a 15% a year return. So I think I've got a margin of safety to double my money in 5 years. And that is what we want. So this is why it's now my largest individual stock holding. Have a look at the chart, and you can see in the last year we've gone from 317 there back in October last year, and we're down at 159 at the moment. Yeah, it's a great opportunity, and if you're interested, you've got some cash. Now, I'm not saying you should go and buy this because everyone's portfolio is different, and I'm not an investment advisor, but certainly this is what I'm doing here. So the second purchase, we've got Corsair Gaming. So Corsair is now becoming quite a large individual stock holding, perhaps a tad larger than I originally anticipated. But again, we've had a bit of a rundown in the last year. You can see that it's dropped all the way down below 30 in the last kind of month or so. And I managed to add at 26.6, which is pretty much near what so far has been the bottom of this drop-off. So I'm pleased with that. It was 10 more shares at that price. So yeah, not a massive extra purchase, but it does lower my average slightly. Quality of their products is good. They're a market leader. They're in the streaming. these areas are just going to keep growing, and I think they are severely undervalued. Now, they have dropped off recently because of their earnings, and there were some much higher logistics costs. So they did miss, I believe, on their EPS, not by a huge amount, but I think they missed, if memory serves, and therefore they dropped off a bit. And I've taken that opportunity to increase my holding because I think long term, this is an absolute banger, this one. I can see them getting to at least $60, possibly towards 80. Yeah, so I'm expecting to at least double my money on this one, possibly even treble it if things go well. Right, third one on that bag is Huya. So Huya again is slightly larger holding than I anticipated it to be originally, and it shows you can plan things out, but market conditions dictate. And the reason is that I think first of all, this company is a strong company. It's one of the market leaders in its space in terms of the sort of streaming platforms in China. Very, very strong balance sheet. And if we have a look at what's been happening here, this has absolutely collapsed from 34, and we're down at sort of 9.5 was about the lowest. Now, I have purchased 5 full shares at $10 and 29 shares at $9.60. And that's been able to reduce my overall average from 16 to 14. And I think that's been outdone in this company. I think that's completely complete position. I'm happy with that average. I expect to be able to double my money on that figure in time, and I don't really want to make it that much a bigger position. So that's Huya. Right, last but not least is GAN, and just a bit of little plug if you want to know when I'm buying and selling. I do post on my Patreon. You can see here that that happens generally within 24 hours, normally the same day as when I have bought and sold. So GAN is another position I've lowered my average on in the last 2 weeks. And again, this has taken advantage of the response to earnings. So I thought earnings were pretty good, particularly with their excellent revenue growth. Though part of that is due to acquisition. I think it's a strong balance sheet company. It's infrastructure for internet betting is probably the best way to describe it. And yeah, the growth, year-over-year growth is really, really strong. We're talking in the hundreds of percent. So I managed to get it at about 14.5 in that range, another 50 shares. So it's a much larger position than it was before, where it's about 1% of my portfolio. It's now about 3% of the overall portfolio. So I think this position is now, again, a completed position like Huya. I'm just going to hold this one. And we know that gambling in the United States is becoming a bigger thing. It's being legalized in multiple states. Platforms doing very well, growing revenue, and they will hit that profitability in due course, but there is a minimal chance of failure due to the strength of the balance sheet. Having a look at this, there is no debt on that balance sheet. So great news. Even though they're not profitable at the moment, I'm not too worried because the chance of failure appears to be low. They're picking up market share in a growing market. That's what I've been up to in the last 2 weeks in my £1 million challenge portfolio. Click on screen now to see my detailed Alibaba valuation. Thank you very much. See you next time.